This is ShadowQuant Forex Edition, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, July 19, 2026, and this is the After Hours session. Now, let's get into it. The US dollar is trading at 162.4 against the yen, sitting at the very top of its 5-day range. But look at the fear and greed index. It's at 14. 14. That is not caution. That is panic. We are in the deepest tier of extreme fear since 2020, yet the charts are refusing to break. The question for this week isn't whether the market will bounce, it's whether the dollar has simply run out of sellers. On ShadowQuant, we're dissecting the mechanics of this stalemate. We are entering Sunday, July 19, 2026, with the markets closed and the noise turned down. The big picture heading into Monday's open is defined by a singular, jarring contradiction. On one side, we have the fear and greed index at 14/100, a level of investor terror that historically marks either capitulation or the precursor to a sustained rout. On the other side, we have the CFTC data showing leveraged funds aggressively shorting the euro and the yen, while simultaneously piling into the US dollar. Let's start with the macro reality, because the extreme fear label in the sentiment index is misleading if you don't look at the underlying economic engine. We are looking at a yield curve that is technically normal but dangerously flat. The 10-year Treasury is yielding 4.57%, and the 2-year is at 4.16%. That spread is just 37 basis points. Historically, a 10-year 2-year spread below 40 basis points is a recession warning signal. We are practically on the edge of the cliff.
Let's look at the charts because the price action tells a different story than the sentiment index. We have to look at the 5-day history to understand the structure.
I'm looking at the CFTC Commitments of Traders report from July 14th, and the positioning is extreme. This is where the smart money lives.
I'm here to stress test the consensus. The consensus right now is dollar strength and short risk assets. The fear and greed index is at 14. Everyone is scared. The standard contrarian play here is to go long risk short dollar because fear has to top out.
Let's tie this together. We have a macro environment that is stagnant, flat yield curve, sticky inflation. We have technicals that are range bound with a bearish bias on the euro and pound, but a strong resistance test on the yen. We have flows that are aggressively shorting the euro and yen, but hedgers are buying the euro. And we have a risk environment where geopolitical tension is rising, but the VIX is still relatively contained at 18.77.
So, what are the calls? Based on this data, where do we see the most action by Friday?
My view is macro stagnation. The Fed is on hold, inflation is sticky, and the yield curve is flat. There is no catalyst to drive a massive move in the dollar or the euro this week. The jobless claims on Thursday are the only data point, and unless it's a disaster, the trend will continue.
Technically, I see a breakdown coming. The euro-dollar has failed to break 1.148263 times. The dollar-yen has failed to break 162.5485 times. These are resistance levels. In technical analysis, repeated failures at resistance indicate accumulation by sellers. The structure is bearish.
Flows are screaming short yen. 90,000 contracts is a massive crowd, but I'm looking at the pound. Leveraged funds just added 29,000 contracts of long pound. That's a divergence. The pound is being bought while the euro and yen are being sold. The flow data suggests the pound has more relative strength.
I'm stressed about the yen shorts. 90,000 contracts short. That's a tinderbox. If anything happens, yield drop, Bank of Japan comment, or even just a profit-taking event, that short position will cover hard. It's too crowded.
Synthesizing all of this, macro is flat, technicals are range-bound, flows are extreme on yen/euro shorts, risk is elevated but contained. The week ahead is a no-trade zone with a potential for a relief rally in risk assets if jobless claims disappoint.
4 distinct views. Pulse sees a dead zone in euro-dollar. Grid sees a breakdown in dollar-yen. CIPHER sees strength in cable. SPECTER sees a squeeze in Aussie dollar, and APEX sees nothing in dollar CAD. That wraps up this edition of ShadowQuant Forex Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.